Hey guys, Vipin here. I wanted to tell you about stock exchanges and a very favorite topic for me and something which many people are not aware of. So let me keep the jargons here as simple as possible and I'll go about explaining to you in this video on what is a stock exchange and what does it do, because a lot of people don't know the basics of how a stock exchange works and why it is in fact necessary at all. Okay, so let's get started with this. Firstly, what is a stock exchange? Technically, it's just a company. Now, when I say it's just a company, I mean when you have the establishment of a stock exchange, it goes through Companies Act of 1956, just like how any other company would be established. But what makes them different here is, in order to establish a stock exchange, you need permission from SEBI. You need a license from SEBI. Okay. For this presentation, I'll be focusing on only Bombay Stock Exchange and National Stock Exchange. Okay. If you actually see the full name of these two organizations, it's actually Bombay Stock Exchange Limited and National Stock Exchange of India Limited. Now, when you have a limited at the end, that's an indication that these are in fact companies. Okay, both Bombay Stock Exchange and National Stock Exchange have got permanent licenses from SEBI. So fundamentally, a stock exchange is nothing but a company. Okay, now why are they treated differently from the rest? The reason being, stock exchanges play a vital role in the functioning of this economy. They are a very critical source for the movement of money. So you have a lot of organizations that go about regulating the working of a stock exchange. Now, like I said, you have Companies Act of India that regulates this. You have SEBI as well that regulates this. You even have the RBI, which regulates the stock exchange up to a small extent. So this is one of the reasons why they are treated different from other organizations in the country. Okay, now moving on, what does a stock exchange do? Okay, first thing that they provide here is the infrastructure for trading. Now, trading here refers to buying and selling of shares, debentures, and a variety of other instruments. I'll tell you what those variety of other instruments are. Now, because of the stock exchanges which are present today, I can go about buying and selling shares almost instantaneously. When I say instantaneously, I literally mean within the blink of an eye, I can go about buying and selling shares. Without a stock exchange, if you look at the history of Bombay Stock Exchange, there are stories of how Gujaratis and Parsis would assemble under a banyan tree once a week and exchange share certificates. This story dates back to the 1800s. So that was how primitive trading was back then. You had to come to a common ground when you wanted to buy and sell securities. Now, although Bombay Stock Exchange has its headquarters in Mumbai, I, being in Bangalore, can still go about buying and selling shares. I need not be a public nuisance by going and shouting at people and asking them, I have 100 shares of SBI, do you want it? All I need to do is put up the trade on the electronic trading platform and quite instantaneously the trade gets executed. When I say a trade gets executed, it means for a buyer you found a seller, or for a seller you found a buyer. Now, thanks to the infrastructure of a stock exchange, you're able to do this instantly. Previously, stock exchanges in India were having open outcry or pit trading. Now, thankfully, it's been done through the electronic systems. Open outcry or pit trading is quite literally open outcry. You kind of shout out a lot to get people's attention, and that's how you're able to buy and sell products. Now, it's an extremely quiet environment. People don't really shout much. All the transactions are done through computers. Okay, then choice of products. When I say choice of products, it's not just limited to shares and debentures. Although shares are a very favorite instrument, you have a variety of other things which people trade as well. Okay, you have, for example, gold, you have agricultural products, there are commodities like onions, ragi, okay, corn, even animal products, which is quite common in the Chicago Mercantile Exchange. You have cattle, which is traded there, pork bellies, in other words sausages, milk, cheese, eggs, soy milk, orange juice concentrate. So the list goes on. In fact, there are even commodities such as weather, which is actually traded. Yes, people bet on hurricanes, which might affect a particular place. So that's how weird the stock exchange can get at times. Okay, then information. Now, what type of information is available in the stock exchange? Now, a stock exchange in fact looks at sensible information which has been taken from valid sources and published. Now, we come across a variety of information which is in fact pretty vague, which is in fact hard to accept. Rumors. You don't find such things happening in the stock market. When information is put across on the exchange, let's say they have the information that State Bank of India is now trading at 2,500 rupees per share. Now this information is common for every trader who happens to be trading in the stock exchange. When this information is published, no one can quote any other price because the exchange here is considered to be right when they go about publishing information like this. So what information do they publish? Apart from prices of shares, they go about publishing details such as, for example, meetings held by companies. What did they discuss? You can download PDF files of the details of the meetings on Bombay Stock Exchange website and National Stock Exchange website. If the company has declared dividends, you can find information about these dividends as well, which is all published on the respective stock exchange websites. So that's a very wonderful set of information which is provided through the stock exchange. Then you have protecting investors' wealth. A lot of people complain and give very negative reviews when you tell them that you are trading and you are investing in the stock markets of this country. Many people in India are conservative. They prefer to put their money in fixed deposits and not in something like shares. It is partially true when you hear that you lose money if you invest in the stock market. Now, in the past couple of weeks, the Bombay Stock Exchange leading index, Sensex or sensitive index, has performed pretty badly. And me being a small investor, yes, I have lost a bit of my wealth by investing there. Now, what has the exchange done to protect the investor's wealth? You'd never come across all the value of the stock exchange sink in one day. That is, if I were to invest 100 rupees in the market today, there is little or no chance, I could say, wherein all the 100 could in fact become worthless. Hypothetically, I could say it could become worthless, but it can't happen instantly in that immediate moment. If the stock market index were to fall in terms of value by 10% in one day, okay, as the trading is happening, you see the value of the index fall by 10%, then trading is cut off for 1 hour. If the value of the indices were to fall by 15%, trading is cut off for 2 hours. However, if trading were to if the index value were to fall even further, then trading is shut down for the entire day. In other words, the maximum I could lose in my investment in one day is 15%, so to speak. If I continue to keep my money in a bad stock for several days, now that's my mistake, and I can't go about blaming Bombay Stock Exchange or National Stock Exchange, saying that these guys are in fact responsible for the loss of my wealth. Okay. Then another very important function of the stock exchange, that would be the clearing house. The clearing house is known as central counterparty. Central counterparty, which means for the buyer it happens to be the seller, and for the seller it happens to be the buyer. Let's say I want to do a trade in the stock market. I want to buy 5,000 shares of ICICI Bank. at a particular price. Now when I put up a trade in the market like this, within seconds the trade gets executed. And when I told you what execution means, for my buy trade of 5,000 ICICI Bank, I immediately found a seller who's able to give me 5,000 shares at the price which I earlier quoted. Now what's the magic happening here? How is it that I wanted to sell 5,000 and immediately there happened to be another guy ready to give me the 5,000 at the exact price which I quoted? In most cases, the transaction in fact has been completed or executed thanks to the clearing house. Without the clearing house, you'll find a lot of trades which go unmatched. Meaning, the trade just lies on the exchange and there is no one there to in fact get a counterparty for this. It eventually becomes a dead trade. And if you are a hardcore trader, dead trades and delayed trades is something that you really cannot afford. Thanks to the clearing house, your trades end up getting executed. And you could rarely in fact see your trade in fact has seen a delay in its execution. The clearing house uses complex algorithms with some really high-end softwares, and using them they are able to in fact match trades on the exchange. And then that's how the trades end up getting executed, and that's how all the transactions in fact are settled. Okay, there are a lot more functions of the stock exchanges that are there in this country. I'll do them in a little bit more detail in the future videos. This in fact, like the presentation says, is a very basic video. I hope you found this informative. Do subscribe to my videos. Thank you. Have a nice day.